A very warm welcome to our friends and viewers on this fresh new episode on this Sunday, 2nd of April, Sunday evening to be more precise from Mumbai. And before we head on to the rest of the episode, the first big news to be shared here is the OPEC has announced a surprise by most market participants, at least surprise cuts. Now, these cuts are very interesting on more than one count. These are not the usual expected production cuts or the quota cuts. So the terminology is quite different. They are saying it's coordinated and voluntary production cuts beginning from May till the end of December. So it's very different from the previous production cuts announced in November, which was the cut in the quota. This is the cut in the production. So going by the past record, the actual cuts from the announcement is roughly less than half. But this time we'll need to wait and see as to how this bears out. But we would tend to believe that it is likely to be in the similar range, which is about half of the announced cuts. But that is interesting on more than one count, as we said, because this week saw amongst the most bullish upward trend in prices, with the Brent prices closing at 79.89, an increase of about $5 per barrel. So in this week, this was amongst the most bullish week, and this coordinated production cut gets announced now. What could be the possible reasons? So, and here at this point, we would like to remind our viewers that perhaps we'll need to go back to our 5th February forecast in our episode, where we had forecasted that April would be the month where the OPEC Plus announces the price, the production cuts. And our assessment or our forecast at that point in time, that this would be due to the collapsing demand in the 3 major markets, which is the US, the Europe, and the China. While the demand side has not really attracted as much news headlines, and the prices for the last 2 weeks have been going up, and this production cut announced. So we suspect the demand side has a major factor in this by the market participants' perspective, very unexpected production cuts. We'll wait and see, but it feels very good to be on the mark so much in advance. So thanks to all viewers who have been tuning in. More importantly, we take up the second key topic. So how bullish, or what could be the impact of this production cut announcements? And the total production cut by OPEC by this minute, by the news we have been able to gather, is about 1.16 million barrels. And if we add the previously announced cut of 500,000 barrels per day by Russia, it adds to a total of more than 1.6 million barrels per day. While the Russia cuts, when they were announced, they had not stated as to whether it will continue beyond March. And this time, they have also announced that this production cut, their production cut of 500 KBD, is going to again continue till the December of 2023. So that's where we are. While it is important to understand that the Russian cut so far has not really impacted in real cuts of the data which we are seeing. So it's more of an announcement. So we have to see the rest of the cuts as well, with the kind of time it requires and the data lag which usually follows these kind of announcements. We'll need to wait and see as to how much of actual cut is there. One important point arising out of it is the very bullish narrative which was being built from about the May of 2022 about the lack of spare capacity. While that was the time that the price hit its peak, the recent peaks of about 140, and it has been in decline ever since. And this year has seen prices ranging between $73 on the lower side to about $86 on the higher side. We are currently at 80. So where do we see market heading? We see market will treat it as short-term bullish for prices for sure. So we could see some continued uptick, but our forecast is that this uptick would be relatively muted. We still do not see the prices going beyond $85 from the current 80 over the next 2 weeks. While the market awaits more data and more announcement and tries to digest all the implications of this announcement, the demand side concern will start building up when we see it to be the main reason for this announced production cuts. And we see markets remaining in the midterm of 1 to 3 months lower than the $80 instead of higher than the $80. So to that extent, with this production cut, we are revising our forecast of the $70 prices to about between 75 to 80. But that is for short term. Our long-term view, which is beyond the 2 months, is that it's still going through some severe demand side concerns. So we'll need to wait and see. Thank you for joining, and that's all for this week's episode.